Let's get the read on all this from Lenore Hawkins and Jonas Max Ferris. Lenore, what's interesting about this is the president did a lot of teasing about that second quarter GDP number that's coming out Friday to say, look, we're on fire. Things are going great. This is proof what's happening in your state, what's happening in these other states. What do you make of the approach he's taking?
Well, he's really, really good at getting people fired up, and I would love to see the second quarter be fantastic. But my job as a professional investor is to worry and to look for all the pitfalls. And really what we're looking at the second quarter is it's kind of like if I go on a water and celery diet for a week, I'm going to make big weight loss gains. But that's not exactly a sustainable trend, right? And in the second quarter, we got a lot of celery. We've got the tax cuts, which they're not going to be getting us a boost quarter after quarter because after a few, they're already baked in. We've got a pull forward in demand on our exports because countries like China bought a lot more soybeans than they would normally buy ahead of those tariffs going up. So that means that they're going to be buying less in the latter part of the year because they bought more than they needed in the second quarter. And we've got a similar thing happening with U.S. companies building up their inventories for the same reason. All these tariffs, raising their prices, so they bought more of the materials they needed.
So in other words, it could be kind
quarter.
of like a one-time event here. Others have said the same, Jonas. She said it far more eloquently, and I like the celery analogy there, although I would have used Napoleon's as an approach. But, Jonas, the one thing I do wonder about that is, even if that's so, I have no reason to doubt that would be a hard number to top. The higher it is, the better the average, right? And play that out for me.
And it's a good time for it to be high because we're not going to see the sugar crash, to use the same narrative, so to say, when the stop. Look, it's like a Home Depot selling a lot of batteries and plywood before a hurricane. It's definitely good for sales, but you're going to buy less of those things later after the hurricane. The hurricane being the potential trade war escalating even more, people trying to lock in the deals like the other guest just said. We don't know, is that like a 0.5% of GDP? If we get a 5% number, which sounds outlandish, it's obviously not adding 4%, that kind of additional sales. So the question is how much of it, this will be the debate after this news comes out later this week, was because of advanced purchasing, of getting ahead of a trade war, of higher prices. I got clients email me, should I be buying this now? Who manufacturers make stuff in China. I've got a guy in the steel business. They've had increased sales also because of these issues. So they've distorted the market like panic buying before any kind of storm. But we don't know exactly how much. And the trade pictures improved a little bit this week with Europe. So maybe that's an overplayed scenario. And I would say some of the tax cuts are a little more long-term than that. Trump has a plan for the sugar crash, which is money to areas like Iowa, right, when they ultimately are going to have sales problems because of these trade wars.
Lenore, it's interesting. The markets, despite Facebook, which is a separate story today, like the fact that maybe things have cooled down with Europe. We don't know the deal of that trade arrangement, but we do know that it's been taken out of the intensive care area. So I'm wondering what the markets might be telling us and counting on. What do you think?
Well, I think it's definitely very good news to see that there's some progress there. And I would also say that Trump's clearly going to be under a lot of pressure to get this stuff addressed before those midterm elections, because China's in a very different spot, right? You've got the Chinese leader. He's a leader for life. He does not need to worry about elections. Trump needs to worry about it, and the Republicans need to worry about it. So they really need to make some progress in the coming months. And I think we do run a risk where the markets have been really nervous. Yeah. There is a good positive risk that things could turn out to the upside, like hopefully we will make some progress with the European Union.
Well, it did show a pragmatic side of the president, Jonas, and in the minute or so we have left, is it your sense that that was the encouraging development, maybe that the markets like, that he is not as rigid, that his bark might be worse than his bite? What do you think?
I think what happened with the European area seems like Trump is not as crazy as some people fear in trade, and it's just going to keep escalating in a game of chicken that's never with no end. And I think also if he gets the EU on our side, that gives us more strength against China, which is really the foe we're trying to deal with in this. And that's enough of a fight to get in. You don't have a battle in every zone like Hitler did. It's like you're going to sort of lose at some point. You're the only country, even though we buy more stuff than everybody, it doesn't give you unlimited power. I think investors have shrugged off the Facebook decline in a way that is scary, because losing more money than any stock in history in one day should frighten investors in other tech stocks, and doesn't appear to be. So that concerns me more than the future soybean sales.
But keep in mind, we're only back down to levels we were a few months ago. Guys, thank you both very, very much.